Hi ladies and gents, welcome to this podcast. What we're going to be looking at today is Purchase Returns Journal, and we're also going to look at one of the source documents as we're doing on all this little series of podcasts. The document we're going to be looking at here today is a debit note, and technically it's not actually a source document. The source document for this transaction would actually be the credit note that we'll look at when we're doing sales returns, and the credit note is sent by the supplying company to the customer to confirm the goods have been received and they are going to be credited with the value of the goods, so they don't need to pay for them. Debit note is actually sent by the customer, so you'll always see the customer's name and the customer's address at the top because it's written by the customer, and then you'll also see the supplier's name and the supplier's address somewhere else on the document. There will normally be a debit note number, in this case DR3456, and the date of the document. Then going to be a quick section at the bottom, and that's going to give a description of the goods, the unit price of the goods, the quantity, and the total amount that the goods are worth. So in this case, it's a carton of burgers that were damaged on receipt. The unit price, the list price was $20 per carton. There's 4 of them, so the total value of those cartons in theory is $80. And then somewhere on the document, they will also deal with any trade discounts. There will always be trade discounts and not cash discounts on a debit note. And the reason for that is the cash discount is only ever applies when the goods are actually paid for. So in this case, it's a 15% trade discount. So the actual value of the goods that will have been supplied to this customer will actually be $68 and not $80 because we record the net amount after the discount. And that's the value that would have appeared on the invoice. Also a pack of buns, 2 packs of buns, $10 per pack, and again on this one there's a 10% discount, so they're going to reduce that $20 by $2. So therefore the total amount of discount, if you like, the customer is going to be claiming back is 18 plus 68, which is $86. What I've done for you are a couple of debit note exercises so that you're ready for your exams. Obviously put the correct addresses, names in, debit note numbers, dates, and you've got 2 items to enter. Second exercise is slightly more complicated. You've got a little bit of information that you need to put into the debit note at the top here, and then you've also then got to work out the amount of discount, the value of the goods according to the list price, and also what the unit price of the goods were. And on the second one, you'll need to work out how many goods were supplied, take off the discount, and give the net amount, and then find out the total. Enjoy the exercise, and then when you come back, I'll go through very quickly the purchase returns journal. Okay, purchase returns journal is sometimes called the purchase returns daybook, and it's also sometimes called a subsidiary book. Again, don't worry, it means exactly the same thing. It's just people calling the same thing by different names. You may see, so actually in the daybook itself, you'll always see a date, you'll always see who the supplier was. You'll normally see a credit note number because it will get put into the books when it's being agreed by the supplier, that those goods have been received and you are not going to have to pay for them. There may be a gross total, there may be the trade discount, but not always. The net total will always be recorded, and that's the actual amount of money, if you like, that you've claimed back from your suppliers. So this business will be claiming back $100 from Coca-Cola, $25 from Happy Burger, and $25.60 from Pepsi Cola. First thing is completing the purchases ledger, and if you remember the purchases ledger, that contains only the supplier's accounts. So we're going to put 3 transactions in. First transaction, 5th November 2015, and that's for purchases returns. And for a total of 100. if you remember, the reason why this goes on the debit side is because when we send the goods back, it's going to reduce the amount of money that we owe to our suppliers, or the business owes to their suppliers. So they're not going to pay the full $780 because they've sent $100 worth of goods back. So it's reducing the liability. Okay, Happy Burgers, well, for Happy Burgers, $25 worth of goods, and they were from the 21st of November. We then got PepsiCo, $25.60. Purchase returns, and the date for that was the 30th of November. Right, final thing that we need to do, and again, a bit like the purchasers ledger, what we actually do is we put the totals in from the purchasers returns ledger into the purchasers returns ledger account, which is kept in the general ledger. So it's not in the purchasers ledger, it's in the general ledger. That's a really common examination question and mistake that students make. So what we're going to do is we're going to find out the total of all the purchase returns for the month, and it's $150, $50, 60, and that's going to go on the credit side because it's reducing our purchases, which are a debit, or we can also think of it as we're actually losing goods and therefore losing an asset. We do that on the last day of the month, so in this case 30th 11th 2015, and that's come from the purchases returns journal. So we'll put in there for the reference to purchases returns journal. Okay, and what we can do as a double check that I haven't made a mistake anywhere is we know that the total there is $156.60. So hopefully if I do a quick auto sum over here on the side and add up the total of the debit entries made in the different suppliers accounts, that also comes to $150.60. So I have made a mistake. So I need to change that to $150.60, and we now know that I've made no errors at all when I've been transferring the information over. Right, for you guys, I've got you some exercises to do, a couple of simple exercises. It works based on the figures from the previous podcast that you've looked at. What you need to do is to obviously put the 3 returns in for both exercises, and obviously email it back to me if it's given to you as a homework. If not, you can compare your answers with the model answers that I've given you. Thank you very much for listening. Hope you enjoyed doing the exercises, and I'll see you very soon.